Hey guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with transparency. Today we got a clip from Raoul Powell, Savvy Finance clipped out, and it's of course more of the same I've been talking about. It's all noise, driven by liquidity. Don't fuck this up. Just echo same thing. Raoul Powell has my head trying to guys is it. Right now I'm sitting lounge out to Paraguay, but decided to go for you guys. So take a listen to these two short clips.
Noise. Now, the issue is most people don't start with any capital. That's the hard thing. And so that's why everybody looks for the 100x, because they don't have any capital to start with, because people's wages are like not high enough compared to the cost of living. I totally get that. And then that forces you to go out the risk curve to get any capital. I understand it. But if you do get any capital together, I'd rather you did a second job and put that money into trading than just go out too far on the risk curve and miss the opportunity set. Because the opportunity set is the longer term thing. So if you've got a second job or a third job, do whatever you can using your skill set where you can make a bit of extra money, stick that into your investing book. And I know at first it feels stupid because you've only got 100 quid or $100 in that book and 300 in that, and you feel like stupid because you see everyone on Twitter throwing around $1 million. It doesn't matter. You'll get it over time. But if you keep trying to get the 100x, you'll never get past the I'm paying my bills at the end of the month idea. And I know that is the hardest thing, starting from nothing, getting somewhere. It's really, really hard. In crypto markets, the other risk that you're going to go down is you're going to use leverage because it's so available. It's so available. And it's much easier than trading futures. It's just so there. You can use it intelligently. So maybe you juice your returns, but I'm talking about 2x or 3x leverage and not 20x, 50x, 100x, because that's back down here where the probability of losing all of your money is about 90% or 95%. I, in my entire career, have rarely seen anybody who is a successful short-term trader over an extended period. It just doesn't happen. The best I ever saw in the short-term time horizon was Paul Tudor Jones. He was pretty good. Most people can't do it. Steve Cohen was good. Most people can't do it. Simply can't do it. There's very few rich traders. There's some legends that came out of the Chicago pits. But they also had informational advantage. You'd see the hand signals, you see the orders coming through, you can front run. It's a very different market. Against the machines in this market, I see very, very, very few. So that's the issue I've got. Is like, I don't think trading works for most people over time, unless you change your time horizon. And I know most people don't want to hear that, but that's the reality. And I've seen a gazillion traders. I've employed several of them. I've seen them. I've seen the hedge funds come and go. Most people can't short-term trade. Bitcoin, lots of people.
So the TLDR for that is, like you said, short-term traders don't make it, and most people can change the time horizon. And if you're looking to get that 100x, 1000x, you're more than likely going to get wrecked. And I can preach from first principles of doing this myself. I should have last cycle just invested blue chips, primarily, of course, into Bitcoin. But unfortunately, I was chasing those 100x, 1000x, and I ended up with zero, as Raoul just said. And unfortunately, a lot of you guys will probably make that same mistake right now because this cycle has been lackluster. So you're thinking you missed it or you're late. So you're going to go further on the risk curve and chase more shit tokens and probably make the same mistakes that I did. Unless, of course, you're one of the OGs with me and you've been around the block for a while. But I know even in my Telegram, seeing, a little, I'm not gonna say jaded, but antsy. They wanna, go get something else and tired of waiting. Like the 2x isn't enough, 3x isn't enough. So I get it. But like you said, if you think that you're going to win against these algorithms and trading bots and things of that nature, you're sadly mistaken. The bigger institutions that are trading, they have way more data, more bandwidth, way more speed, whatever you want to call it, than you. You coming across just getting into crypto and think you're going to do a trading course. I did the same bullshit. See a YouTuber, he's like, yeah, buy my course. None of that shit's going to work. It's going to get wrecked. So stay humble, stack sats.
It gives you extra signal in that. The main cycle we look at is this observable 4-year cycle. And that is driven by actually the debt refinance cycle going back to 2008. People think it's to do with Bitcoin itself. It's not. All assets are doing the same thing. It's the same as the business cycle. It's the year-on-year rate of change equals the S&P, it equals the ISM. 2008, everyone reset interest rates to zero. After several years, rates were allowed to go up, but everyone reset their debts to this 3 to 5 year sector. It creates this perfect 4-year cycle. Our analysis this time suggests that it might stretch by another year. People think it's preordained that it's 4 years. It's not. It's actually because they've actually extended the debt cycle out to 5 years right now. So we think it might extend. But that cycle's not going away. It's the same cycle that's driven the NASDAQ, Amazon stock, Tesla stock, the same cycle that's driven oil prices. I mean, you name it, it's the same thing. So it's there and observable. You can use past parallels, which is interesting, why we use a lot of past parallels. I grew up on that because of Paul Tudor Jones and his famous 1987 crash thing. And a lot of the time, it goes wrong just when you want it the most. But sometimes it gives you contextualized information. Past network adoptions kind of look like current network adoptions and the crowd psychology that goes with it and all of these things. So they tend to work somewhat. They always break when you most want them to do. I famously completely screwed up last cycle where I thought that Ethereum was going to get to 15,000. I thought it had this extra leg and the whole cycle ended. That's before I knew what drove the crypto cycle. I went back because of that learning, that loss. Well, it wasn't a loss because I had call options, so and I'd made a lot of money out of the cycle. But it was that mistake that I went back and tried to understand what drives this damn thing. And that's why we had the massive breakthrough with the everything code and this whole kind of macro crypto nexus stuff that nobody's ever done before because of that. It's like, why did that not work? And that was driven on a past parallel plus a bunch of other stuff.
For Pal,
so again, that's why I always keep coming back to Raoul, because he's got skin in the game. He created this framework. No one else was talking about the debt liquidity cycle and demographics and all this stuff until Powell created it. And now we're looking at it being an extended cycle, or 5 years, due to them kicking out the refi cycle an additional year. So again, it just looks super optimistic, bullish for next year. But I know, of course, those hanging on to the way things have always been and looking at the previous cycles, this does feel like, we've capped out. Bitcoin is now back trading in the 100,000 range, and it's twice broken a wick down into the 99 or below 100. But 100 definitely feels like the floor for right now. And of course, this is still bearish for a lot of people here. But again, if you're listening to Raoul, if you look at just the writing on the wall, even if you're not listening to him, looking at rate cuts, looking at what other central banks are doing all over the world, looking at the refi cycle, looking at additional liquidity being injected next year, all of the bullish foundation catalysts, Bitcoin treasury companies, legislation, all this stuff. It's like, it's hard to say that the top is in, but it doesn't matter. Like I've mentioned in other videos, top or bottom, staying humble, stacking sats, you have nothing to worry about. This just means when it goes down, you're stacking sats, you're DCAing once a week, every day, once a month, whatever. You're still buying the lows. That's all you got to do. Don't use leverage. Stay humble, stack sats. That's it. All right. Hope that provides some value. Smash that HPO special. Help a brother out. Like, subscribe, comment down below. Till next time, lift daily and achieve your impossible.